Into the M&M earnings call where you have the CEO, Anisha, in conversation right now.
So one of the issues that we had as we continue to prune our portfolio and continue to maintain that discipline, this is an exit that was important and that has been completed. And there you see market share of 43%, up 50 basis points year over year, and farm machinery revenue on a very good clip now,
up 30% at 330 crores for the quarter. So on track again for strong growth and starting to deliver what we've expected that business to deliver. Overall PAT growth, as I mentioned earlier, 54% year over year for the same quarter. Mahindra Finance, tractor disbursements are up 41% and has gained share in that space. NIM improvement, 47 basis points. And we've talked about digital transformation in the past with a project called Udaan, which was literally a 3-year project that has been completed. Adoption is very strong in the 90% plus points right now. And we're starting to see the benefits of that from a customer experience standpoint as well as from a cost standpoint. And you will see more benefits as we go forward. What we also see is GS 3% less than 4. Or less than 4.5 that we promised, but it is at this point less than 4. Assets under management up 13%, and we will now start pivoting this business to growth. We have focused a lot on asset quality, on controls, and we're starting to see results from that, and we will now start pivoting the business to much faster growth as we see the profit up 45% for Mahindra Finance. Tech Mahindra, good wins in BFSI, manufacturing, retail in a tough environment. AI efforts have been accelerated. We've launched Orion, and margin progression is on the track that has been outlined, and we will see that delivery going forward into the next year as well. TCV is up 35%, EBIT margins up 250 basis points, and excluding the one-off I mentioned, profits are up 35%. For growth gems, with Hemant coming into logistics, we've just seen remarkable execution there. And this is a business that is now being set up on a very strong track. Express business, this is the first quarter with a positive gross margin, and we will continue to see more gains as we go forward. White space reduction, there was a fair amount of white space at or warehouses that had been leased, and we've now reduced that by getting in more customers by taking out some of that space. E-commerce segment is growing well, and therefore what you see is revenues up 11%, EBITDA is up 70 basis points. In hospitality, we had some adverse weather in the past quarter, September in particular, and therefore occupancy is a bit lower at 73%. But the average unit realization is up very significantly from to 85%. And in our holiday club, Europe, we do see some headwinds there. It's a smaller business compared to the main one, so it's something that we'll have to deal with. Nothing that's concerning at this point. It's still a business that is overall a good business doing well, but we continue to work around the geopolitical headwinds that we see there. Room inventory is up 5%, membership is up 1%, but we're not focusing as much on member count as the business has talked about. It's more about the value we deliver as well as the value realization that we get from there. Real estate on a very, very strong growth trajectory. Continued GDV acquisitions, and that has been a very strong story through last year as well as through the first half of the year. We are among the top 4 now in terms of GDV acquisition last year, and have really put this business on the map in terms of a very, very strong and profitable real estate business. Higher realization in the IC business, a very healthy launch pipeline. We see the pre-sales number up 89% here, and the GDV acquired is up 3x, despite the fact that we had a good year last year for GDV as well. This is why you can see I use the word delighted by results this quarter. You just see that across all the businesses, just very, very strong execution that our teams have driven. And with that, our standard page on consistent delivery of the commitments we've made. ROE is up 19.4%. I will always give my caveat that we plan it at 18, so it may fluctuate a bit up and higher and below than 18. So do not expect 19.4 as something that would continue, because we will make investments.